Mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we help you learn to invest in 45 minutes or less. We break down the world of investing from beginning to dividends so that you can hopefully make some returns. My name's Bryce, and as always, I'm joined by my equity buddy, Ren. How's it going, bro?
Well, you say as always, but I've had a week off in Fiji.
True.
So...
Lucky you. I've been holding the ship together.
Oh, right.
How was Fiji?
It was pretty good. It was relaxing. It was a lot of hanging out by the beach, swimming, snorkeling.
Nice.
Yeah, it was good.
Tough for a fair-skinned guy like yourself.
The long sleeve rashi did get cracked out.
So, Ren, one of the last episodes of the month, so we're going to be doing an Ask Us Anything for the month of November, answering some of the questions that have come through from our equity mates, either via our forum online, equitymates.com/AUA, and our Facebook group, Instagram, Twitter. We've chosen some of the questions that have come through and we're going to be answering them. But before we do, exciting news coming into Christmas. If you're struggling for a Christmas present or want to be part of the Equity Mates team, we now officially have some merchandise on sale. It's been in the works for a while, but we now have men's and women's t-shirts, both up for sale. $25. It's going to make an awesome Christmas present.
Yes.
So
Perfect time to get one now with our Get Started Investing podcast series coming out.
yes.
So really get the shirt, listen to the new series. No better way to spend your Christmas.
Immerse yourself in Equity Mates over Christmas.
Start 2020 the right way.
We would really appreciate it if you guys jump on and throw in a few orders. equitymates.com/shop. That's where you'll be able to pick up your shirts. Ren will be sending them out hand-delivered to your door. Personal touch. So, yeah, $25, men's and women's. Limited edition on this one. It's got the logo, big bull of ours on the back.
If you were
design.
at our live shows, it was the shirts that we were wearing.
Yeah,
which
everyone was like, Ran, can I have the shirt straight off your back? It's so good. Right, so that's the housekeeping. Let's crack into the episode, Ren. I guess the first question that was very obvious during the week was, where are our Julia Lee mastermind episodes? Where have they gone?
Yeah, I know. Where is Julia?
Where is Julia? I'll start by saying, we know she's started her new business, so is incredibly busy at the moment, but
Well, for people that don't know, she has started a new business.
Yes.
She started her own funds management business.
Yes.
Berman Invest. We're very excited to see how that goes, but we do want her back on the podcast.
We do. And she will be coming back. She is just trying to work through some stuff with work at the moment. So we will be bringing Mastermind back before Christmas and doing a few other stock-related episodes over Christmas as well, which we'll introduce closer to the time. But Ren, you went back and had a look at some of the stocks that Julia has picked, because some that we've picked have not gone so well. Do you want to just update?
It's been a running joke that Julia is crushing us in this stock selection game.
Well, it's not a joke. It's reality.
I think if you wanted to do a pairs trade, you could go long whatever Julia picks and short whatever we pick, and you'd probably do all right. But I had a look at how Julia's gone. So we've had 4 mastermind episodes. In the first one, she picked Linus, and that was up 11% in the months after. It's now down 15%, but we'll give Julia the credit that she would have sold. But then the other 3, so Eclipse Group up 9%, Santos up 3%, and Baby Bunting up 19% since she announced it on the show. So full credit to Julia. She truly is the mastermind of those episodes.
Absolutely. Yeah, I think if anything, we should just whatever she says, we should just put a bit of cash in and have a mastermind.
General advice only.
Yeah, general advice only. Let's crack on. So this question has come in from Christine. It's a 2-part question, Ren, so I'll throw it to you. The first part is she's downloaded a couple of trading apps, both CMC and IG, and they do both come with demo accounts, but then she got a bit lost. So first question, both of them said they were CFD trading accounts, and she Googled it and found out what it stands for, but it really didn't help much. There are other bunch of terms that stumped her as well. So can we perhaps help her understand what the CFD trading account side of things means as opposed to stockbroking account? And also the second part, would we ever consider doing an episode on navigating these trading platforms?
So for the second part, it is something we've thought about, maybe not as a podcast because there's only so descriptive we can be, but
It'd be so tough.
but look, we have a fledgling YouTube channel that hasn't been given the love and care that it needs to really grow. But I think we often talk about creating more video content, and I think trading platform reviews and how to use trading platforms would be a natural fit for video rather than podcast. So watch this space. Once we find some time, we'll keep looking into it. But look, I think, in terms of CFDs, don't touch them.
What are they? Like, why would these two platforms have a CFD demo trading account? And
Well, so CFDs are contracts for difference. They're a derivative product, and essentially, in layman's terms, you can make a bet on the movement of a stock price. They are great for brokers. A lot of these online brokers make a lot of money through their CFD business rather than through their stockbroking business. For people who are experienced and who understand what they're talking about, they can be useful and you can make money from them. And they're a tool like any other derivative or any other investment option is a tool, a means to an end. But they carry a lot of risk. And so you can lose more than you invest, which is an important distinction from shares where you can't. You only can lose what you do invest. So I think until you're more confident as an investor, it's probably not something you need to worry about. I think more generally, if you're finding trading platforms are confusing, at the end of the day, they are literally just a way to get into the share market. You don't need to understand everything on the platform when you start. Don't let the fact that there are some things you don't understand stop you from starting. The main things are know what ETF or share you want to buy. Find out what the ASX code is, search for it on the platform and put the order in. There's obviously a lot of useful things on these brokerage platforms that you can learn what they are. But I think if we're talking about just getting started and just taking that first step, it's important just to get started. Don't let the design and layout of the brokerage platform scare you off, because if you don't get started, you'll never learn and then you'll miss out on all the benefits of investing.
yeah, nice.
So next, there's another one of CFDs, so I'm going to ask you that one because I want to move on from CFDs. It's a long one, so to condense it, essentially, if you are trading CFDs, you can put a stop loss on. Are these stop loss guaranteed?
So there are things in CFD trading called guaranteed stop losses, and I gave a representative from one of the CFD companies a call just to confirm. And
how good's your network, by the way?
And yes, guaranteed stop losses in CFD trading are guaranteed, but you have to pay a premium for it to guarantee that stop loss. Rates for that premium do differ per product and per broker, but it is important to make the distinction that this is for CFD trading only, not stock trading. So yes, you can stop out, you'd lose your money, and you would also have to pay a premium. Another thing to consider with CFD trading is because it's a leveraged product, you are also paying an overnight holding fee on long positions if you decide to hold for a long period of time. So this question was for Sean. It was a longer question, but I hope in short that answers your question there. So yes, guaranteed stop losses are guaranteed, but you will have to pay a premium on that. So check your product disclosure statement for more information on the fees for that. So that was from Sean. This one's from Joe Wren. Are you aware of any app or website that allows you to set up stock alerts, which is a little more sophisticated than simply, I guess, changes in price, i.e. when their PE ratio might change, or an email alert to say that there's a profit downgrade or something along those lines?
Yeah, so to answer the specific question first, yeah, there are some. I haven't used them, but I had a bit of a look before. So there's a website, customstockalerts.com, which seems to be what you're looking for. Also another one, YCharts, the letter Y charts. Both seem to be able to do what you're looking for. So if you want to know when Commonwealth Bank has a price to earnings ratio of under 15, then you can set that alert. I guess the other thing is, though, when you think about what a price to earnings ratio is, you could do the calculations and just put a price alert at that point. So, because the earnings get reported once a year, once every 6 months, for some, not many Australian companies, once a quarter. So you know what price it will have to be for the price to earnings ratio to be at whatever ratio you want it to be. So you could just set a price alert. Like, you could do the maths and set a price alert. But yeah, look, there are definitely those two websites that I said can do more custom alerts as well.
Question for you, Ren. If you were to set custom alerts for yourself, would there be any that you would set?
No. I still am banging on about this long-term approach.
Yep.
Look, potentially, if I really like a stock, but I think it's overvalued, but I really want, or, you know, it's sort of in that range where it might trade down into a price where I think it's undervalued and would buy it, maybe I'd put a price alert on. But generally, if I'm that far down the stock picking process, I just keep an eye on the stock anyway.
Yeah.
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 I've never really used alerts. I get enough random notifications on my phone to trigger the dopamine responses in my brain. I don't need any more.
Fair call. Okay, let's move on. So that was from Joe. Thank you, Joe.
So next one is around financial freedom, and we know how much you love financial freedom and the FIRE movement, so I'll ask you this one. So if you're looking to retire and you have a retirement figure in mind or an idea of the annual income that you need to retire, how can you work out how much is required to invest into shares to potentially provide this return from dividends?
Okay, so I guess if we use an example, it's pretty straightforward. So assuming that you want to retire with an income of $40,000 a year, you know that you're going to get a 4% return, generally speaking, from stocks. Perhaps that's the return you're hoping to get from your stocks over a long period of time. So you're going to need income from a portfolio that's worth about $1 million. That is probably the simplest way to figure out what is your stock portfolio value. Then working back from there, I guess you just need to determine, well, to get to $1 million in terms of savings and compound growth, you need to work out how much you need to be putting away on a monthly or perhaps yearly basis. But remembering that your yearly return is not going to be guaranteed, so you're going to have to make some assumptions on that. But yeah, I mean, it's pretty straightforward to, if you know you want to be living on X amount per year and you're assuming that you're going to generate a percentage return, you can figure out what sort of portfolio value you need for that.
Yeah, I think the only thing to add is that dividends aren't guaranteed. So if you are actually retiring, you might want to look at something like bonds or annuities where the income stream is guaranteed. I mean, we saw with the big four banks, they all cut their dividends recently, and the dividend payout ratio probably stayed relatively the same, but it's just the share price dropped, their earnings dropped, and they cut their dividend. So if you are retired and you have that $1 million and you expect to get 4%, what you don't want is the share price of those shares to drop, and then you only have $800,000 and you're getting 4% still. So, you know, you don't have to rely on dividends. Obviously, in this low interest rate environment, some of those other streams don't pay out as much as you would want, but that might mean you just need to work a little bit longer and save a little bit harder.
Yes.
Just to have that margin of safety.
Equity line.
Nice. Thanks for the listener who sent in that question. That was an anonymous question. Ren, this one is for you. This listener's interested in buying 4 ETFs at the moment, but all of them are with the same provider. Is it better to try and buy ETFs from a range of providers? Does it make any difference?
It can make a difference, but in a general sense, it doesn't. The only reason it would make a difference is if there was a risk with the ETF provider themselves. So if you were trying to buy all your ETFs from, you know, Bryce Lesky's ETFs, PTY Ltd, who had $30 assets under management and was running it out of his garage, then you might
Stop giving away my business plan.
and was only charging 0.001% for his ETF. Sure, it might be the lowest fee ETF on the market, and that might be attractive, but there's a risk inherent in the company itself, and if the company falls over, look, you might be fine. You can probably get your money out, but it does create a risk there that you don't really want to lean into. On the flip side, if all of your ETFs are with Vanguard, the way that Vanguard is structured, the amount of business that it has, it's up to something like $9 trillion or something dollars under management. The risk of Vanguard collapsing is a lot lower, and therefore having your money in a number of different ETFs with them is far less risky. Now, the question specifically asked about beta shares. I look, for my mind, beta shares is on the Vanguard side rather than on the Bryce Lesky Pty Ltd side. Got over 9 billion assets under management at this point. I think it's the biggest Australian ETF provider, as in like the Australian company, rather than your Vanguards and your BlackRocks and stuff like that. And so, if you are diversifying with them, if you're getting their NASDAQ 100 ETF, their ASX 200 ETF, and their India ETF, then that is geographic diversification, and you don't need to worry that they're all with beta shares.
Yeah, agreed.
So we're ripping through these. That's good. Question for you. So we talk a lot about stop losses and stuff like that.
Yeah.
And one of the more complex but useful types of stop losses is a trailing stop loss. And essentially what it means is that if a share price is rising, rather than just having a static stop loss at a position you set, you could say, I want this stop loss to move up as the share price moves up. And so Mike has written in and asked us, is there a trading platform that allows him to place more advanced trades like a trailing stop? Because he's currently with CommSec and can't say how to do it.
Yeah, good question. And none of the platforms that I use, Ren, from memory allow you to do these specific conditional orders. So I had a quick squiz online. CommSec have what's called Core Trader, which is a professional online trading package, and they offer a whole bunch of things, real-time market data and pretty instant access to market movements. One of the features that it comes with is the ability to do falling sells and trailing stops. So if you are interested in that side of conditional trading, then CommSec does offer that. I'm sure it comes with a fee, and I'm sure that some of the other big trading platforms also would offer a premium service along those lines. So your traditional sort of broker that the retail guys use, from my experience, doesn't really give you access to those. But just have a look with your current broker, and they may offer a premium service where you get access to live market data. That's what you'd be looking for. And then with that, you'll probably get some more order types and various other bits and pieces that make it that premium product. So yeah, hope that answers the question.
So that brings us to the end of the questions that have been written in, but there's one segment that we want to bring to the Ask Us Anything segment.
Yes.
We keep talking about this Facebook group that we've got going on, the Equity Mates Facebook discussion group. Great group, best group on Facebook. The only reason you shouldn't delete the app. We get a lot of good questions on there. The community's talking amongst themselves, and we want to celebrate that and give people a taste of what you might be able to get if you join the group. So we're going to do, from this Ask Us Anything onwards, a Facebook discussion group question of the month, and then we'll share our 2 thoughts on it.
Nice. So who's the inaugural winner?
So this comes in from Katie, and the question is, does anyone know of Australian-based robo-advisors that have ethical investing options? So Katie is interested to learn if there's an entirely ethically based option in Australia for global shares, Australian shares, bonds, etc. Now, the reason that I thought this was a good one is it combines 2 themes that are very topical, I guess, in the investing community. Ethical investing is killing it at the moment, both in terms of its performance, but also in terms of the amount of money being dedicated to it. And then robo-advice, finding ways to use technology to give people cheaper investing advice, both big themes at the moment.
Robo-advice specific ethical portfolios.
Based in Australia.
3
conditions.
Quite the criteria.
Yeah.
No, from the top of my head, no, but I'm sure
yes,
you've done some digging. Yeah,
so I had a look. To be fair to you, you didn't know what question was going to be asked. So there's an Australian company that looks like it ticks all those boxes. It's called Goodments, as in good investments.
Yes.
Goodments.
Yes.
And so they essentially a startup that is all about ethical investing, and they do a lot of work on ranking companies based on a lot of different things. So ethical management, gender diversity, environmental practices, all of that kind of stuff. So they're probably one to look at. A few that I don't think they're based in Australia, but Investopedia have done the hard work for us, and they've actually ranked the best robo-advisors for socially responsible investors 2019. So there's 4, and I'll just give you their names. I haven't looked into if they offer products in Australia, but they're definitely they're clearly good, seeing they've won these awards, and they're ones to look into. So the 4 are M1 Finance. That got first place, 5 out of 5 stars, not bad. Motif Investing, Interactive Advisors, and then Personal Capital. So you can have a look at them. You can just go to the Investopedia. If you just Google Investopedia Best Robo-Advisors for Socially Responsible Investors 2019, there are links to all 4 of them. And then one that's definitely based in Australia that's relatively new is Goodments. So a few options out there.
And along the lines of Goodments, Ren, we had a question a couple of Ask Us Anything episodes ago about Goodments, and we were a bit confused with their pricing because they had shown on their website that it was like $12 a year or something like that. But however, it was $13.99 a month, and we couldn't work out what that is. They got in touch with us to say that there was an error on their website. They've now updated their pricing. So good to know that they're listening. And
I'm just looking at their pricing part of their website now. It is very clear.
Yeah, very clear now. $13.99 per month for unlimited trades, or $11.25 per month paid yearly, also unlimited trades. So good to know that they've updated that, and it's very clear. And hello to Goodments if you're listening.
I guess that we can say that is the power of equity, mates. We can make change.
Nice. So congrats to Katie. We'll tag you on Facebook as the inaugural winner of the Ask Us Anything question of the month.
There's no prize.
We can make a prize.
No prize.
Ren will send the shirt off his back. If you're keen to ask us a question and have it read out on the show, hit us up on our website.
Or the Facebook discussion group. Yeah.
Facebook discussion group. We keep an eye on that each day. The conversation is great, so get stuck in there. Just to close it out, Ren, another bit of a plug for ourselves, and that is to do with the Get Started Investing 12-part miniseries that we're getting much closer to launching. You and I sat down and...
We've got a launch date, don't we?
We do.
Do we want to announce it or...?
No, because just our luck, it won't happen. But sometime in December, we're going to be releasing a 12-part mini-series on the fundamentals that you need to get started investing. It is now live in your podcast feed. There's a trailer up, so make sure you subscribe to that and get your friends involved, anyone who you think would benefit from understanding some of the raw fundamentals to help them build their investing journey. So get started investing with Equity Mates in your podcast feed. Subscribe now. We're very keen to get that going.
If you haven't subscribed yet, what are you doing?
Yeah, I mean, come on. Nice. And in the spirit of sticking to a formula, Ren, we did say that we would read out any reviews that have come in over the last week. And luckily, we have had some come in.
I thought we were only going to read funny reviews.
Yeah, well, okay.
I don't actually know if these ones are funny or not. I don't want this segment to just be us pumping ourselves up.
Yeah, okay. We'll leave it until a funny reviews comes in.
Yeah. Make them funnier.
There's a challenge then for our listeners. Please rate and review us, but also do so by leaving a funny review.
Yeah. But give us 5 stars as well.
Of course. Well, we'll leave
actually,
it there.
give GSI 5 stars. Actually, no, save it until it's released and then give us 5 stars.
Yeah, whatever you want to do.
Yeah, I don't know. Just rate us.
Whatever. We'll leave it there. Always good to chat with you, Ren. Looking forward to next week.
Sounds good.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.
Equity Mates.